Hello and welcome to another update video about ARB. So we take a look at the ARB chart today. The price across the board, prices across the board, they go up. Yeah, we have a pretty promising day in crypto today. So let's take a look at the structure here. Bear in mind that this is a very short-term history chart, so very limited chart history, very limited history. We cannot really use any of Elliott wave's predictive powers here because there is literally no larger degree trend, no higher level trend that should give us, that can give us really a strong idea of where things are going. But as I said, as soon as we have like 2 to 3 months of chart history, we can at least use some, use the Fibonacci levels and the wave counts to get some levels for risk management. And I think that's what we've done in recent videos. So the idea is still that in the white wave count, which is at the moment the primary scenario. In this scenario, we are in a diagonal pattern to the upside. So we have an ABC structure to the upside in a wave 1. Then we had a wave 2, which bottomed here in November. Then an ABC structure to the upside in a third wave that sort of topped in January. Then we highlighted, okay, somewhere from here, it would be ideal if a fourth wave pullback is unfolding. It did start actually. The price dipped into the support area. It's quite a massive wave 4 though, but obviously still acceptable because the price has not dipped below the 50% Fibonacci level. And to be honest, ideally I'd like to see that wave C of 4 in the white count complete. I actually would prefer if it doesn't go any lower, because any lower than that, at least it would shift it into the alternative scenario, which is the yellow count. So I think either the low is in now in the white count and we should see the price push higher. Where would it go? We'll talk about that in a minute. Or we come down in a C wave of a larger B wave. Both bullish scenarios, and I can tell you that this chart will become bearish below 95 cents. That's really the long-term support. It is the 78.6 retracement level of this rally, and it is also where we have previous swing lows. So if you ask me for my opinion at the moment, I think the main support level here that we're dealing with is the last swing low. That's at around $1.54. Of course, I mean, the Fibonacci levels are key. So even if it goes down lower, okay, if it tests that level 152 and holds it and turns around, all good. All I want to avoid is a sustained break below $1.52, because that will already shift probabilities towards the yellow count. But technically speaking, I would count it probably as a wave 4 as long as it's holding $1.36. As you know, the 50% Fibonacci level is like a magical number for a wave 4. We normally don't want, even in a diagonal, I don't want a fourth wave go below the 50% Fib level. In a diagonal, I can accept the golden ratio, the 61.8 Fib, but it's very deep for a wave 4. So ideally, I just would like to avoid another low. It would just challenge the white scenario significantly. So let's talk about a target for the fifth wave if the wave 4 is already complete. We can do that by calculating the length of waves 1 to 3. We go to the low of the fourth wave. That gives us a target range for wave 5. And I would be watching the area around $3.22 next. Maybe a little higher, but let's keep it to the 322 level next. It's already quite an impressive price growth. And it's the 61.8 extension is a very common target for a fifth wave. Now, in the alternative scenario, if we break below last week's low, and if we see it break below $1.36, then we're likely dealing with a yellow count in which this is an ABC structure. And yeah, we could still keep up a bullish perspective as long as it's holding the 95 cent level. It would, however, be not an ideal structure from a bullish point of view, because it would make the long-term chart much less certain, because it would indicate that the rally was just a 3-wave rally that always introduces a lot of uncertainty. Then we have a 3-wave pullback. And then, yeah, I mean, the next move up could be a 5-wave move. But the thing is, after a 3-wave top, and I would have to assume it tops in 3 waves, if we get a break below $1.36, it's always introducing a lot of uncertainty. It could even lead to a new bear market low then. So bottom line is, if we get any break below the orange support region, things will get very, very unreliable on this chart. They already are, okay? They already are. I'm convinced we have many better and clearer setups than this one. But I mean, if you like to trade it, you can of course use the orange support box as orientation, as well as obviously the upside targets that I mentioned. Looking at the micro, I mean, there is not enough clarity really to confirm what this is. To me, this looks only like a 3-wave move up so far. Okay, so it's not a 5-wave move up. That's what we would need to have good confirmation that some kind of a low is in. We're not there yet. I don't think it's even completed really the requirements for a 3rd wave, even in a diagonal or an impulse. Maybe just about. So one more high to, oh no, it didn't. 1 second. Oh yeah, okay. One more high to possibly $1.99. Yeah, it would look like that. One move up here in wave 5 to round about $1.99, $2. Yeah, and I could argue that we might have seen here a diagonal pattern, and then we are going to expect a pullback, and if it's corrective, then it can go, right? So it's always the 5-wave move. It hasn't created 5 waves yet. So if it gives us 5, then we can look for the 3-wave pullback. It usually, when we see 5, it indicates a low is in, and it increases the probabilities that in any pullback, a higher low is going to be formed. That's my update about Arbitrum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.